All right, everyone. Well, thank you for joining us here on our next edition of our Franchise Your Business webinar series. My name is Tom DuFore. I'm the founder of Big Sky Franchise Team, and I'm so glad that you're here. Thank you for joining us today. And today's session is our current franchise sales and marketing trend session. If you're new to us, or this is your first time, or maybe you haven't been here in a while, we go over a wide variety of economic data stemming from macroeconomic uh, information and data points, and talk about how those may be affecting franchise sales or franchise lead generation. And then we also will be narrowing that down into small business. And then we'll be getting into more micro data pertaining to franchising, franchise trends, and entrepreneurship, and talking about that. And all of these things contribute together to a collective overall sentiment that the general consumer may be feeling, and they might not even be able to tell you why or why not. But this gives you some extra information to see what are the trends and things that are happening right now that you can be talking about with your franchise candidates, or updating franchise marketing, maybe some frequently asked questions or other sections on your franchise website, to be talking about that with them. So with that being said, I'm going to share my screen, and we're going to go through a lot of this information very, very quickly. So if there's something that you'd like to say, hey, Tom, would you, chat about that, please type something in the chat box if you're joining us live here, and I will do my best to work with you here. And we're going to do all of this to get you done here within a cumulative total time of about 30 minutes or less. So thank you again for being here. By the way, one final housekeeping item that I'd like to remind you of. We have two podcasts. The first is our Multiply Your Success podcast. We have episode 167, I believe, coming out on Monday. And then for this webinar series, it's available if you missed this or want to share this with a colleague or somebody else you know. This will be made available on our YouTube channel, as well as our other podcast. We will publish this recording on our other podcast, which is called Franchise Your Business. Both podcasts are available wherever you subscribe to podcasts. 30 some different podcast services out there. It should be available. So let's go ahead and jump right into this. I will share my screen. And the first, let me see, here we go. And the first document here, or report that we're going to cover, is the Institute for Supply Management Report on Business. And this is the Manufacturing Purchasing Managers Index report, the PMI report. And what I like about manufacturing PMI is it tends to be a leading indicator. So as you can see, right at the end of 2022, going into 2023 here, we've been underneath the overall break-even economy line. So it says the manufacturing break-even is 50%, and the economy break-even line for manufacturing is 48.7%. And today's rating is, or this most recent report that came out, is 46.4%. And it reads, the U.S. manufacturing sector contracted in July as the manufacturing PMI registered 46.4%, 0.4 percentage point higher than the reading of 46% recorded in June. This is the 9th month of contraction and continuation of a downward trend that began in June of 2022. That trend is reflected in the manufacturing PMI's 12-month average falling to 48.3%. So just again, what's important to note, that basically what this means is that manufacturing purchasing managers are not anticipating quite as much manufacturing purchases to be needed. So they're not buying as much supply and things that are going on. So it's just important to note, to see that this is a trend that's showing, things are slowing down a little bit here. Now, the next one is the services report. This is the Institute for Supply Management report on business. Services Purchasing Managers Index is at 52.7%. And it says in July, the services PMI registered 52.7%, a 1.2 percentage point decrease compared to the June reading of 53.9%. A reading above 50% indicates the services sector economy is generally expanding. Below 50% indicates it is generally contracting. And anything, a services PMI above 49.9% over time generally indicates an expansion of the overall economy. Therefore, the July services PMI indicates the overall economy is growing for the seventh consecutive month after 1 month of contraction in December. So you can see between these two reports, one is showing contraction, the other one is showing growth. And so you'll get a sense here through these reports, and it's been this way for probably a year or so that we've been doing this, that you see these mixed results and mixed reports. Some are saying contracting, some are saying growth. I think what we can kind of start to take out of this is that it's maybe just kind of relatively flat as we're trying to sort through some of these inflation, rate increases, and things that we see going on. All right, here's the next PMI, and this is the Institute for Supply Management report on business. It's the hospital PMI. It's 53.3%. And it says economic activity in the hospital sector, subsector grew in July for the second consecutive month after 1 month of contraction, preceded by 35 consecutive months of growth, say the nation's hospital supply executives in the latest hospital ISM report on business. The hospital PMI registered 53.3% in July, a 1.8 percentage point increase from the June reading of 51.5%, indicating a second consecutive month of growth after 1 month of contraction in May. And so the point here, again, is showing that this report is just over 50%. And it's kind of been zigzagging a little bit as well. And the hospital report's their newest report. And so there's just not as much long-term data available for this, but just something for you to be aware of. Okay, next up is our trading economics report on what the U.S. unemployment rate is. So the trading economics report, it says the unemployment rate in the U.S. decreased slightly to 3.5% in July 2023 from 3.6% in June, and below market expectations of 3.6%. The number of employed people decreased by 116,000 to 5.841 million, and employment levels rose by 268,000 to 161.262 million. The so-called U6 unemployment rate, which also includes people who want to work but have given up searching, and those working part-time because they cannot find full-time employment, fell to 6.7% in July from 6.9% in June. The labor force participation rate was unchanged at 62.6%, remaining at its highest level since March of 2020. So herein is what I think is some really great news from this report on the U.S. unemployment rate through tradingeconomics.com that shows that unemployment's down. What I really like is what's sometimes called the real employment rate, which is including part-time or some people that are seeking work or gave up because they couldn't find something in that part-time work or underemployed. And so that fell from 6.9 to 6.7. And that labor force participation rate is continuing to either stay the same or increase, which is critical for us. Now, I can tell you that employment continues to be one of the biggest challenges from the small business community that I continue to hear. And judging based off of the hiring and things that are going on, looks like it's going to be continue to be just there's a battle for finding employees and staff and labor to come help you out in running your business. So this is going to be a sticking point that you may hear from franchisees that might be saying, well, how am I going to find employees? Or I have a friend who owns a business that said it's hard to find someone. And if you're selling them a franchise, you may consider adding into your marketing or adding into your sales presentation how you help them find employees as the franchisor. Now, we know we need to keep a clear separation between employee with your franchisees and hiring and helping them, but you can be giving them some really nice suggestions on how to recruit franchisees, different sources to do that, different suggestions on how to how to source or interview candidates to find better candidates. And then the last part that I would suggest that you could consider is even maybe looking for headhunters, especially if they're looking for more skilled type position. So that's the unemployment rate. Now, this is the uninflation rate. This is from tradingeconomics.com as well. This is for the United States inflation rate and the CPI. And it says that the annual inflation rate in the US accelerated to 3.2% in July 2023 from 3% in June, but below forecasts of 3.3%. It marks a halt in the 12 consecutive months of declines due to base effects. A year earlier, inflation had started to fall from its peak of 9.1%. In July 2023, energy costs fell 12.5%, less than a 16.7% drop in June, with prices declining at a smaller pace for fuel, gasoline, and utility gas services. Also, cost of apparel and transportation services increased more. On the other hand, electricity prices rose 3%, below 5.4% in June, and inflation slowed for food, shelter, and new vehicles. So just to give some comparison, and here's a chart to show you these trends. So you can see it's been trending downward from last June and July, from 8.3% for this 12-month window down to July of this year at 3.2% for the US inflation rate. Okay. Now, this is from the University of Michigan Survey of Consumers, and they have a consumer basically sentiment. What are the consumers thinking? Are they satisfied or not? What all does that look like out there? And this is the report that is published here. And what it shows is you can see this consumer sentiment on the very far right. I'll zoom in on this so we can see this a little bit better. It starts all the way back in around 1960, and you can see here we're still at historically low numbers here in terms of the consumer sentiment. The nice thing that we can see is it's trending up. It's around getting close to 70%. And at the end of last year, you can see it was down around 55%. So you can see over the last 6 to 9 months how it's steadily been increasing, and this trend is continuing to go up. So all things considered from that regard. So if you have franchise buyers and candidates that are coming in and they're maybe worried, are they still buying stuff? Are they going to buy from me? I wonder what's happening with all the economic conditions and things that are going on. You say, well, it is a little mixed, but here's some positive that I see, at least, is that the consumer sentiment is up pretty substantially from its low point back 6 to 9 months ago. And it looks like it's showing a trend of continuing up. And so reminding them that even if they bought today, and we talk about this often, is even if a franchisee buys today, really, even if you're in a home-based business that you can run from home, it's still going to take 90 days to get that business operationalized. And if you're in a fixed location type business, well, that business could take easily 9 months or a year. And that might be best case scenario to find a location, to maybe 18 months to 24 months before it's up and operating. And the economy is going to look very different at that juncture. All right, next up here is just the number of new COVID cases. This is from worldometers.info/coronavirus/country/United States for the USA. And you can see here that COVID cases, looks like there's been a little blip up here the last 2 weeks or so. The blue line is the 7-day trend. And I still like to show this just to show that, COVID cases just in general are way down. And number two, the whole reason when we started this webinar series was way back when the coronavirus started. In fact, we used to call this Navigating the Coronavirus Economy series. And so this was this is just a little nod to our beginnings back about almost 3.5 years ago. It's been now. Okay, let's take a look at a new report. We've never talked about this. Is a new report that I found that I thought would be really interesting to share. And Vistage, if you're familiar with Vistage, it is a CEO and a business leader mastermind group that gets together where you have a mastermind and a coach and they've started preparing a quarterly report. So this is the Q2 2023 Vistage CEO Confidence Index report. And this is available at vistage.com in their Confidence Index Resource Center. And here are the highlights. I'm not going to go through the whole report, but I do want to show the highlights for you. So here, what I love about Vistage and having this report is these folks that are the people that are in this are going to be similar to a franchisor. These are very successful small to mid-sized business owners in most cases. So here is what they're thinking. On the overall economy, 15% of CEOs said the economy recently improved, which is up from 9% in Q1. And the future economy, 11% of CEOs expect the economy to improve in the year ahead. 50% of CEOs increased revenue. 50% of CEOs expect increased revenues in the year ahead. And profitability projections, it shows 42% of CEOs expect increased profits in the year ahead. And that was down slightly from 43% in Q1. 32% of CEOs expect to increase investments in the year ahead. And 48% of CEOs plan to expand their workforce in the next year. Which was down from 54% in Q1. So basically about half are expecting to expand their current workforce. So just an overall confidence report from CEOs that are running, operating successful small business. So it's a nice little sentiment there to give us an overview. I think I covered this in our last session, but this is from the U.S. Chamber of Commerce. It's a report that they do that's presented by MetLife. And this is a small business quarter index report that the U.S. Chamber of Commerce prepares. And this is the Q2 2023 sentiment. And it says 76% of small businesses say rising interest rates are limiting their ability to raise capital or financing for their business, a 10 percentage point increase from last quarter. So that's I'm sure not terribly surprising, but it very well is something that you might be hearing as you're talking to candidates or people that are thinking about funding. And we'll be talking about funding here shortly on the franchise front. So here we can see that this small business index score, you can see from the dip way down in Q2 of 2020, where it dropped down to 39.5%. Pre-COVID was at 71.7%. So things were really, humming along there in the first end of 2019 into early 2020. And then we see this just as kind of slow. You can kind of see this trend line start to develop here. That it's gone from that 39.5 to the 63.1 that it's at for Q2 in terms of small business index score. So it's been the slow, steady increase over time. So slowly gaining some confidence there. Okay, next is from the U.S. Census Bureau. This is the business formation statistics, and this is one that I've really found a couple of years ago that is really telling to me to show that the interest in entrepreneurship and the desire in entrepreneurship is not just present, it's being acted upon. And you can see this that last month in June, July 2023, there were 469,557 new business startups or new business applications. And this is an aggregate from every state where they take all the new business applications that come in for new business startups. So there were almost 470,000 new business startups last month. It's just incredible. You think about that and I know in franchising, and we've tended to we've seen this over the last couple of months. It's been a little slow, but what we've seen from our clients and from some of the client work we've been doing for franchise development, franchise sales, we see that it's been a little slow the last couple of months. People are on vacation and seeing that. However, when it comes to new business startups or new business applications, they are peaking right now. They are up really high. So I just like to point out that pre-COVID, there was a slow trend from about 2011, 2010, around 200,000 business applications a month. were happening just above that, around that number. And then just this slow increase from about 2015, 2016 on up to the start of 2020, from about 200,000 up to about 300,000. And then post COVID here, we just see this giant spike, and it's been surging over 400,000. So the reason I like to emphasize, and the point I like to make here as a reminder, if you're in franchise sales and you are in marketing, you're a broker, you are a franchise salesperson, you're a franchisor, do not assume anything. The only assumption, let me rephrase, the only assumption you should be making about this a candidate that inquires is that they are seriously looking to start a business, because these numbers for these business applications have soared over the last 3 years and appear to be not be slowing down. That means entrepreneurship, starting new businesses, the American dream is alive and well, and not just alive, it's being acted on. And so that means that if someone's inquiring, chances of them starting some kind of business is pretty high. So keep that in mind as people are thinking, I want to take control of my own future. I want to take control of my own destiny. So make sure that you're remembering that when you're talking to candidates, and to be asking them and talking about that. Because if they don't buy your franchise, maybe they start their own little business. So keep that in mind. Okay. Next, we're going to move to franchising. Let's talk about the franchise. Insights.com every month releases what they call the Small Business Startup Sentiment Index. And the Small Business Startup Sentiment Index, this one was released on August 9th of 2023. And it showcases the percentage of business startups planned for the next 3 months. It says the percentage of small business startups planned for the next 3 months grows on improving sentiment. So it shows that in July 2023, 29.6% of aspiring business owners say they are planning to launch their startups in the next month, reflecting an uptick in near-term sentiment. And so at the same time, 52.8% of entrepreneurs plan their startups within the next 3 months, and 83.3% within the next 12 months. Now, 54.6% of respondents either agree or strongly agree that now is a good time to start a business. And 75.9% of respondents see conditions for startups the same or better in 3 months. So what this is saying is that the sentiment of starting a business in the next 3 months is high. These budding entrepreneurs also believe that conditions are improving for a new business over the next 3 months. So another way that I interpret this in my own words is that budding entrepreneurs are bullish on starting a business and seeing that business conditions are favorable over the next 3 months. So keep that perspective in mind. And you may want to, if you have folks in your pipeline, people you're talking to, you better tell them, by the way, we're halfway through Q3. We're coming up on the tail end of August. The end of the year is going to be here before we know it. We have Labor Day coming up. Then we have Halloween, Thanksgiving, Christmas, and then New Year's Day. And we're in 2024. So be reminding them, if we're going to get this started, they need to get going now if they want to get this open either by 2024 or open during some point in 2024, especially for a fixed location business. Okay, here are a couple things I want to point out for us. Okay, this is that funding, part of that funding aspect. I'm going to zoom in on this. 71.3% say funding or access to credit is the biggest factor in them impacting them starting a business. 71.3%. It is the number one factor by far. This number two is economic climate at 40.7%. So you can see roughly 7 out of 10 respondents said funding or access to credit is their number one issue, and roughly 4 out of 10 said economic climate is their second issue. And roughly the third highest category, which we saw a little uptick here, is political changes. That was 20% of people, or roughly 20, it was 21.3%. So 2 out of 10 people said that to be the case. So if you do not have funding sources in place, or that you can refer to your franchise candidates, be thinking about that. Have a plan in place. Maybe this is a time you consider uh, in-house financing or providing payments or doing something like that that potentially could help the franchisees. And here's one other reason why, and this is on Franchise Insights. We'll go back and finish up the report, uh, 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 oh my goodness, the Small Business Startup Sentiment Index report. But this is from franchiseinsights.com as well. This was released August 16th. This was 2 days ago. This just came out. I'm going to zoom in for us here. And it says personal savings surpass loans and other sources expected for funding new franchise units. So look at this. Percentage of survey respondents show personal savings, 51.3% of franchise buyers, potential franchise buyers, said that they are going to be using personal savings. 36.8% said banks or other loan providers. 31.6% said the SBA. 18.4% said my retirement savings. Credit cards at 17%. In-house financing provided by the franchisor, I think is what that says, 12.5%. Friends and family, 11.1%. Partner in the business. So look at this. In-house financing provided by the franchisor, I'm assuming is what that is saying there, where it was cut off. 12.5% of respondents said that, which means if we want to kind of deduce from that, that the franchise ors that these candidates are talking to, roughly, I would estimate that maybe only about 12.5% of the franchisors are offering something like that, or hoping that they provide something like that. So there's a quick way for you to differentiate if your candidate's considering more than one franchise offering. The other thing to note is this personal savings, 51.3% is using personal savings. So again, having a plan or something in place to help your franchisees is going to help you in finding and securing the franchise, and to be most likely be talking about it early on, right away, in your marketing, on your website, in your email, on your first sales presentation with your candidates as you're going through that. Okay. And again, this personal savings surpass loans and other sources. This is by Michael Alston for Franchise Insights, released August 16th of 2023. All right, here's another report I want to show you really quickly. This is the franchise lead generation update. How has ChatGPT changed search engine market share? Well, Google still reigns after Bing adds ChatGPT. So you can see Google still accounts for 88.9% of searches. Bing is 6.5%. Yahoo is 2.3%. Okay. And then you can see this is a Franchise Insights report by Michael Alston again. And this was released August 2nd, 2023. What you can see here is they have an image here of a Stat Counter Global Stats search engine market share in the United States from January of 2009 through June of 2023. So this red line across the top is Google. The blue line is Bing. This greenish, yellowish color is Yahoo. AOL is this black line. And DuckDuckGo it looks like it's a gray line, and then other is just a dotted line all the way at the bottom. So you can see that Google still is taking most of that search. Okay, and for the final chart that I always like to show every session that we have this is which industries are generating the most leads and which categories. So this is from franchiseinsights.com. And this is called the most active franchise categories is the heading. It says these categories of businesses have received the most inquiries over the last 90 days. So home services had a huge surge. They really had a big uptick. It was not this high. It was around 20% the last couple months. And now it's really upticked quite a bit, up to 23.7%. Senior and healthcare is number 2 at 15%. Business services at 13%. Cleaning and maintenance, 11%. Food and restaurants at 10.3%. Child-related, 4.5%. Education, 3.7%. Financial services, 3.3%. Pet services, 2.9%. And beauty at 2.8%. So these are the top 10 categories. What does this mean? Well, what it means is if you're in one of these 10 categories, especially the top 5, because there's a very big difference between the top 5 and the bottom 5. If you're in one of these categories, it's going to be easier to generate leads. If you're not in one of these top five or top 10 categories for your industry, may be a little more challenging. So I want you to be aware, just as you're starting to set expectations for your lead gen, for your marketing department, and for your sales team to be performing. So that is what I was hoping to cover today. Thank you so much for sticking with me, everyone. And I'd love to just open this up. If there are any questions for comment, discussion, or discussion point, just go ahead and raise your hand, type it in the chat box. I can unmute you if you'd like. All right. I'm not seeing any questions come in here. This will be made available on our Franchise Your Business podcast, as well as our YouTube channel, which is Big Sky Franchise Team. Thanks for tuning in. Again, my name is Tom DuFore. Please subscribe to our podcasts, subscribe to our YouTube channel, and we look forward to having you back next month when I do this session again to give you an update of what's happening in September for as we look back at some of the macro and microeconomic data. Thanks so much for joining me. Have a great weekend, everyone. Oh, wait. Oh, wait. I'm sorry. One question. Nope, that was it. Okay. Thank you so much, Crystal, for the great feedback and the comment. Thank you for being here. Have a great one.